Hi, this is Raman, your tutor from Alberta Real Estate School. In this video, we will take a look at cap rate or capitalization rate. This is an important topic for commercial real estate course. And in this video, we'll dive deeper into what it is, how we use it, and how to calculate it as well. So let's take a look. All right, so let's take a look at how to calculate the cap rate. So the question we have here is we have the value of the property, the sale price of the property is 5.3 million. And then a rent that is being generated for the year is 250,000. And there's miscellaneous income of 25,000, which may be from other sources. Maybe they have laundry machines or they're renting out some signage or parking and whatnot. So that would be all our miscellaneous income from other sources. So that's our income. So here, first step here would be to take a look at what our total income is. So the total income from the two sources, our potential gross income is 275,000. So that's our PGI, potential gross income. Now we have to look at the expenses. So in terms of expenses, we can only take out operating expenses. So in this case, first let's take a look at what would be considered operating expenses. So maintenance is definitely operating expense. Insurance will be part of operating expense. Property taxes, yes. Mortgage, that is not operating expense. Origination points are basically how much money we have to spend. Our brokerage, our brokerage fees that we paid to get the mortgage. So we take that one out. Those are called below the line expenses, and we don't take those into account. Caretaker.
Mortgage is a regular expense, right?
No, mortgage is not counted when we're talking about calculating the net operating income or capital. Yeah, so we would take that out. Caretaker, yes, this is an actual operating expense. Commission, again, below the line expense, we do not take that into account. So first step here would be to take a look at what expenses are given, which ones will apply, which ones will count as operating expenses and which ones won't. So what we'll do with these one is we'll just move them out of the way. Same thing with commission, it's below the line expense, we won't count it. So we'll just get this out of the way. So now what we have, these are our operating expenses. So we add them all together and we get 110,000 in our operating expenses. So now next step here would be to take a look at our vacancy allowance. So vacancy allowance here will be 3%. So in this case, let's, so we'll just move this over here. So what we do is first we take a look at the rent, add that to miscellaneous income to get our potential gross income. Then we will add 3% will be our vacancy allowance for here. So in this case, we will take a look at, 3% of total income here. So 275,000 times 3% would be our vacancy allowance, which is 8,250. So in this case here, we will, so our effective gross income, EGI, effective gross income will be 275,000 minus the vacancy allowance. So we're looking at 266,750. Okay, so that's what we get after taking out the vacancy allowance. In normal times, your vacancy allowance will be around 3%. During, like, for example, right now, because of COVID, our vacancy allowance will be higher, 5%, because a lot of vacancy in the market there. So effective gross income here that we get is 266,750. Okay, so that's the first part of it. And then second, now we have to look at operating expenses. So these are all our operating expenses. So our total operating expenses here would be 110,000. Right? Next step here is we have to calculate the net operating income. Okay, net operating income will be effective gross income minus our operating expenses of 110,000. So that's 156,750. Okay, so that's the first step. We have now calculated our net operating income. Now, in order to calculate cap rate, so cap rate is, excuse me. So what's our formula for cap rate?
Your NOI divided by your value or the price?
Yeah, so cap rate is net operating income divided by our value purchase price. So in that case, we're looking at cap rate of 2.9%. So let's say times 100 to get the cap rate. So 2.957. So about 3% approximately.
Okay. So
does that make sense?
Yeah, I think where I made a mistake from myself, I did everything right, but I missed the vacancy allowance part.
Okay.
That's the part where I didn't put the 3% and then I got 275 as opposed to 266, and then everything else was the same. It's just that part was missed. So the vacancy rate is, it's not always 3%.
Generally, rule of thumb is 3 to 5%. So 3% automatically will take.
Automatically.
So in case in the exam, they haven't mentioned, like you didn't, so we just take 3%, right?
We just put 3%.
Okay, so in the exam, if they don't mention it, don't do it. So normally if they will mention it, right? If they ask you to calculate cap rate, they will mention it. Okay. If they ask you, but sometimes they will ask you to calculate PGI, right? So then they will give you all this information. So this is the variations that they can give you, right? So they can give you all this information and they'll say, calculate potential gross income. You don't need any of this stuff. You just need these two items, right? Okay. So read the question carefully. And if there's vacancy, if they ask you to calculate cap rate, they will give you vacancy allowance. Right?
Always.
Or they will just say effective gross income is this much. Right? Yeah. So then that means it's after.
It's already there.
Yeah, it's already accounted for.
Okay.
Make sense?
Yeah.
Yep.
Okay. Perfect. So that's how you do the calculation. So let's take a look at. Okay. So that's our cap rate. Okay. Expect a few questions. So basically, you can get questions on those things that we mentioned. Calculating potential gross income, which is rent plus miscellaneous income. Effective gross income, which is your gross income minus vacancy, right? They can ask you to calculate the net operating income, which would be your effective gross income minus operating expenses. And then last step is they can ask you to calculate the cap rate, okay? So there can be questions on all or any of those. So there's a whole bunch right there, okay? And then if you needed to calculate the value of the property and they have given you net operating income and the cap rate, you can just take your net operating income and divide it by the cap rate. So if we take a look at this one here, so let's say we had the cap rate and we have net operating income. So what we would do is value of the property then would be our net operating income. Sorry, net operating income divided by our cap rate. So see, we got 5.3 million, right?
So that's it for today. I hope you enjoyed this video. If you would like some extra help in preparing for your exam, I invite you to visit our website at www.albertarealestateschool.com, or you can give us a call at 587-936-7779. Have a wonderful day, and I'll see you next time.